So the current vibe is that a weakening U.S. dollar could, give Bitcoin a little push, but it might still delay its climb back to $120,000.
Interesting. Right. Because even though the dollar is around 98.5 now, we've seen that it's not a surefire ticket for a Bitcoin surge, is it?
Exactly. It's like the dollar's weakness is a necessary ingredient, but not the only one. Global trade tensions and shifting credit market signals add a whole new layer of
Yep,
uncertainty.
that makes sense. So the idea is, despite the US dollar showing some vulnerability, investors are still cautious about pushing Bitcoin back to those high levels.
Absolutely. See, when you look at historical trends, Bitcoin's inverse relationship with the US dollar index, that DXY, has often meant that when the dollar strengthens, Bitcoin drops, and vice versa.
Right. But here's a question. Why wouldn't that weaker dollar automatically push Bitcoin up to $120,000?
Well, it's because there's more at play. For instance, credit market indicators, like the ICE BOFA high yield option adjusted spread, are showing that risk sentiment is kind of teetering. Investors might turn cautious when economic slowdowns or higher borrowing costs
Yeah, exactly. I
loom.
get it. So, in a way, even with a softer dollar, if investors get spooked by, you know, recession fears or even rising tariffs that push inflation, Bitcoin might still struggle, right?
Right on. And it's interesting because the same spread that spiked a bit in August and September when Bitcoin was dropping after hitting highs earlier, dropped sharply later, which correlated with a brief rally.
That's a neat connection. This reminds me of those times when the market seems to be on a roller coaster. One moment you think it's all boosting Bitcoin, then you see the credit market sending out signals that pull it back down.
Exactly. It's like an intricate dance. The tech sector's dependence on imported AI data processing units, trade tensions, these external shocks really add to the complexity and put a damper on the bullish scenario.
Yeah, that real world impact is definitely a twist. And frankly, I kind of wonder if the heavy focus on the dollar's performance might oversimplify the picture. Risk sentiment and investor appetite, they really play a huge role here, don't they?
They sure do. It's like watching a train track where the slowdown is as critical as the speed. A drop in the DXY can suggest that investors might eventually move into higher yield assets, but if the credit spreads widen sharply, that's a warning bell.
Right, that's a fair point. So basically, while a softer dollar is a good sign for Bitcoin, these headwinds from credit market risks and global tensions might hold the bulls back for now.
Exactly, it's an interplay of factors. And until we see more resolution in these broader economic concerns, that $120,000 mark might have to wait a bit longer.
Certainly a complex scenario, fascinating stuff. It just goes to show how the crypto market is so closely tied not just to tech innovation, but also to macroeconomic currents selecting the stage.
Totally. And it's like every small economic shift ripples through, making the crypto market as unpredictable as ever, right?
Absolutely right. Well, here's to hoping that as the market finds its balance, Bitcoin gets its much anticipated boost. When all the stars align, of course.
Yep. And until that happens, we'll be keeping a close eye on these macro factors and credit signals. It's a wild ride for sure.